Your offer got accepted, now what? Okay, so you kept your cool, followed your realtor's guidance, and your competitive offer has been accepted. It's very exciting, but the journey's not over. Now come all the steps that are needed so the home actually becomes yours. The first thing your agent will do is to open up title and escrow, because so much of this step is behind the scenes and might seem pretty mysterious. It's actually very straightforward. Escrow is a safety net that protects both the buyer, the seller, and the agents during the transaction. It's like if Switzerland stepped in. They don't represent the buyer or the seller or the agents. They're a neutral third party that makes sure that everything everyone agrees to in the contract actually happens as it's supposed to. The escrow officer starts by checking the home's title for any issues. They make sure that the seller actually owns the home and can legally sell it to you. They hold your initial deposit, also known as earnest money. They hold it in a trust account. They make sure there aren't any liens on the property. They make sure everyone is doing what they're supposed to do, like inspections, disclosures, etc., according to what was agreed upon in the purchase agreement. As you get closer to owning the home, the escrow officer coordinates with your lender to prepare closing documents, making sure all financial figures are accurate and all terms of the sale are reflected and correct for both buyer and seller. In essence, escrow is there to ensure that everyone holds up their end of the deal. All agreements are honored and the transition of property ownership is smooth and secure. It's a crucial step in the home buying process, ensuring that when you get the keys, the home is rightfully and legally yours. While they're doing all of that, you're having inspections done. Who pays for them is in the purchase contract. It's like sending the home to the Mayo Clinic for a head-to-toe physical. You want a professional inspector to check out everything: roof, windows, foundation, electrical, plumbing. Is there dry rot? Could there be termites? The well and septic if the property has one, and other special inspections, like wind mitigation, for example. Your agent can tell you what inspections should be done and what's not necessary. A good agent will always recommend that home and termite inspections be done by, of course, a licensed inspector. If they find something that might be of concern, they might advise you to have a specialist to look further into it. As a local expert, your realtor should be aware of other issues based on their past experience or with other homes in the area. While you're busy with inspections, the seller will be filling out all the disclosures they're required to fill in. Think of it like the seller telling you, here's what you need to know about this house before you decide to buy it. It's all about honesty and transparency. Every state is different in what they require, but disclosures can include things like previous repairs and renovations that were done, perhaps encumbrances or encroachments. There are also other types of disclosures that the seller most likely wouldn't know about. For example, like natural hazard disclosures or lead paint disclosures, governmental disclosures, retrofit standards, or fire hazards, or even radon gas. For buyers, these disclosures are super important because they give you a heads up about what to expect with the house. It might be of small things like a leaky faucet, or bigger issues like an old roof that's going to need to be replaced. Having these things disclosed helps you make informed decisions about buying the home and might even give you some negotiation power. And for sellers, being open and honest in these disclosures helps ensure that the sale goes smoothly, with fewer problems or disruptions later on. Also, during this time, a professional appraiser, who is a neutral third party, evaluates the value of the home you're about to purchase. It's not just about numbers. It's about confirming for the bank that the home is worth the loan they're giving you. The value of the home must equal to or less than the loan plus your down payment. If it isn't, the bank won't finance it. If that happens, you may have options like offering more as a deposit. But this is something your MLO, your mortgage loan officer, and agent will advise you on. By the way, during this period, your mortgage loan officer may ask you for even more financial information than you've already given them. They may ask you for employment verification or letters explaining where the cash for your deposit actually came from. They may ask you for more tax returns, but in general, don't worry about it and just get it to them without getting irritated. They need these things to make sure the lender gives final approval and gets the funds into escrow for you with no delays.